So, Darin, we did see some impact when it comes to the government wanting to just calm the situation when it comes to iron ore and the steel market as well. Does Beijing have the broad ability, just by jawboning, to be able to bring down some of the exuberance that we see across multiple commodity classes?
Yeah, I think so, at least in the short term. I mean, obviously, long-term supply and demand is going to dictate price. But relative to most countries, Beijing has a lot of policy tools, either through state-owned companies or banks, to at least influence prices in the short term and at least make it a little bit riskier for speculators, for example, to just engage in long-only bets.
Darin, do you see much respite when it comes to CPI, in particular when it comes to the food basket and pork prices and hog prices?
Yeah, so CPI has actually been a little bit moderated by the fall in pork prices. Since the start of the year, live hog prices in China are down close to about 60% now. So if you look at the CPI yesterday, we were at 1.3%. You know, the pork component of that took 0.5% off. So if it wasn't for the fall in pork prices, we would have been at 1.8%. So at least the pork component of CPI is providing the government quite a bit of tailwind, because for consumers, the grocery bill is a lot lighter, even if some other things are seeing inflationary pressure.
Yeah, we have seen really prices rallying in soft commodities like corn, wheat, and soybeans as well. And it seems that the weather is really not helping, whether we're talking about here in the U.S. or Brazil.
Yeah, and that's been a global issue, and that's, I think, part of the motivation for China to be buying quite so much corn. You know, it's been doing record amounts last year as well as this year, and part of that is to sort of rebuild stockpiles. There was a multi-year effort to sort of wind down some of these stockpiles starting back in 2016, and I think the perception is that maybe they went too far in destocking, and now they want to get back to a comfortable level. So that's also helping sort of fuel that inflation, especially in the grain market.
So do you expect Beijing's campaign to curb prices, whether it's now Bloomberg hearing that they could be imposing price controls on coal, will eventually work out for China when you're seeing this global macro environment where we continue to see the global recovery as well?
Well, I mean, it's going to create a headwind, and I think it's a similar thing that we saw with, you know, some of the announcements regarding the appreciation of the renminbi last week. You know, as they were saying with the renminbi, it's not simply a one-way bet. You know, they're telling investors there's going to be some risk there, and that's sort of at a time when a lot of people are expecting the sort of longer-term commodity bull run. So I think investors have to weigh, you know, the inflationary aspect versus what sort of Beijing might do from a policy perspective to tamper that.